You're listening to episode 3 of the Insurance Industry Insights podcast with Tim Yorke of the Benefact Group and Simon Hunter of DXC Luxoft. Welcome, Tim and Simon, to this episode of Insurance Industry Insights. Thank you so much for joining us. Simon comes from DXC Luxoft and Tim from Ecclesiastical. So Tim, maybe you'd like to take us away. Tell us a bit about yourself and the work you're doing at Ecclesiastical.
Thanks very much, Joel. Tim Yorke. I'm the Group Transformation Director, actually at the Benefact Group, which is the group that owns the Ecclesiastical Insurance Company, plus some other insurance companies, as well as an investment management division and a broking and advisory division. So it's a fairly sort of broad-ranging business. Ecclesiastical is the largest insurance company in the group, and it's been around for about 135 years or so. Started off life as per the name, writing insurance to protect churches, but now is a specialist commercial insurer, much like any other, although with a slightly different purpose. Really.
Excellent, thank you very much. And Simon, tell us a bit about yourself and what you're doing at DXC Luxoft.
So DXC Luxoft, I'm the solution architect on the insurance division. I've been in insurance for 35 years. Started off at Eagle Star, and then obviously it got merged with Zurich Insurance. Been there for a number of years before moving to the innovation group, where I was a Java developer, building claim solutions, and then becoming the global product owner. So I was involved in the roadmap for that particular product going forward. I later joined IoT Tech. We were building a Internet of Things platform, which is cloud native microservices, SaaS platform, before eventually joining DXC last October. So I've got a lot of insurance and technical expertise to bring to the table.
I didn't tell you how long I've been in the insurance industry.
No.
Since dinosaurs roamed the earth.
Yeah. Thinking back to Eagle Star days, wow. Back in Manchester, that was a long time ago.
Thank you very much. Now, our guess about the audience of this podcast, and we're early enough to not know much through the interaction on our platforms, and we haven't started pushing it and marketing yet, but our guess is most people signing into this will be insurance professionals looking to learn about the latest innovations and what their peers are doing in this space. That being said, I was once told that if you really understand something, you should be able to explain it to a 10-year-old. So if both of you could explain a little bit about how insurance works for you in language to be understood by a 10-year-old, that would be a great place to kick us off. Tim?
In some respects, certainly from the perspective of Ecclesiastical, we're a relatively straightforward insurance company. And the key thing for us is that we provide protection for people who otherwise, at times of crisis, would find themselves unable to keep themselves or their businesses or the things that they're engaged in going forwards. We're a specialist insurer, and the way in which we're set up allows us to target certain markets that would otherwise find it hard to get access to some of the cover that we provide. So, as I say, specialist insurance looking to protect people from the worst moments in their life.
Thank you very much. Well, let's keep going with that. You're a specialist insurer and you cover some unusual risks. Can you tell us a bit more about the institutions and the buildings that you're looking after?
In many respects, it's quite a wide range. We protect a lot of the UK's heritage buildings. We have sort of specialist products that target those sorts of things, expanding out into leisure and things like that. We obviously, as per the name Ecclesiastical, we protect a lot of churches. We insure all of the cathedrals in the UK. Wow. If anyone watched The Traitors, we look after that castle. So it's that kind of stuff in that sort of core business. But as I say, in other areas, we do have sort of lots and lots of charity business that we write in different ways through the companies in the group, but providing insurance coverage to charities, as well as lots of other things that we provide to those sort of target customers.
Very good. And continuing on that charity line, I understand that the group is the third largest corporate giver to charity in the country, right, notably through the Movement for Good Awards. Can you tell us a bit about how this for more than profit ethos informs how you innovate, look after your customers?
Yeah, I mean, in many respects, we're very like other organizations. We have to operate efficiently. We have to make the most of the money that we put into the business in terms of what we get out of it. Our purpose is very different. We're owned by the Benefact Trust, which is a charity, and therefore the money that we generate out of our business, as well as investing in the business to keep it moving, goes to good causes, either through our own giving or upwards to the Benefact Trust and then outwards. And we're in the middle of a sort of a strategic chapter at the moment that gets us to a target of having given away 250 million to good causes over the last sort of 7 or 8 years. We're getting close, just got over 220, and we're looking forward to meeting that milestone. So it just changes the way we think about what we do. I think sometimes there can be change for change's sake, or change because we're on a fad, or because we're in a hype cycle, or for whatever else kind of a reason. But here, when we spend money, we want to make sure that we get the return on that investment, because for us that means we can give more to good causes, and therefore we can help improve people's lives. So it just brings a different motivation. However, when I get into project manager mode, I do just as much shouting as I would do normally in any other organization. So,
well, on that note of avoiding change for change's sake and being wary about hype cycles, I think we're all aware right now that there's a lot going on with artificial intelligence or machine learning. John Norton, writing The Observer, asked, "Are we caught in an AI bubble? Is the Pope a Catholic?" Our previous guests have sounded a cautious note on AI, pointing out that real world return on investment is hard, particularly in a regulated industry. So where do you think insurance leaders are with AI or machine learning or data science more broadly at the moment?
So I think we'd say cautiously optimistic, I think is where we are. As you say, we've seen these things come and go. If this was 3 or 4 years ago, we'd all be talking about blockchain. These things go in cycles. But I think there's something quite different about AI. Interesting that you start to, immediately you say it, start to create a number of different segments of what AI is. So do we mean machine learning? Do we mean, what is it? What is it exactly we mean? And I think what's important here is to know what is the tool that we're deploying to make sure that we're using it to tackle the right kind of problems, that it's suitable to the right kind of problems that we're applying it to. And if we think about things like machine learning, I think we're probably all quite confident about what that is. It's fairly standard, but high-powered compute that allows us to respond to predictable sets of circumstances in ways that mean that we can get better at decisions because we can push more data into a decision process that we understand. I think where everyone gets anxious is you suddenly think that, well, I'm a philosopher by background, so AI suddenly becomes the oracle at Delphi. You ask it a question, it gives you an answer. You really don't understand why it's given you the answer it's given you, and therefore what you do with it. So we have to treat it carefully, make sure we understand the tool, and then make sure that we're applying it for the right kind of solutions. But in that context, I think that there is a degree of cautious optimism. We do a lot of crunching of data. We do quite a lot of routine processing in our industry, and there's certainly an opportunity here for generating value.
Very good. And on that positive note, thinking about that point and generating value and using these exciting new tools, or indeed more traditional techniques to go after new opportunities, are you able to share any of the experiments and innovations that you've been working on at the group? Perhaps some won't be public yet, but maybe there are products or product lines that you can talk about that our audience might be interested to learn about.
Yeah, I probably can't talk about specifics. We don't tend to be super early adopters at scale of this sort of stuff, but we are quite innovative in the way in which we start thinking about these things and how it might come. So we're obviously in a whole bunch of conversations, as everybody is in the industry. We're reading the same sort of articles to try and get us to the point where we understand what sorts of things could we bring this to bear on. And again, we're not necessarily working on all of these, but examples might be things like, if we think of processes that take a huge amount of time, things like wordings. Across the industry, if you look at wordings technicians, we used to have large departments full of people doing wordings, usually in the basement without any windows. Those sorts of things are changing, but actually, are there ways in which we can, using a lot of the knowledge and the experience and the stuff that's built into our organizations, use that data to change the way we do some things like that get us things that we're looking for, and do it at a lower cost, at speed, And then within parameters that we think we could program into the machine that might then say, yeah, that's good. So things like consumer duty wordings and stuff like that. So there's definitely real opportunities in those sorts of areas. Clearly, the more exciting stuff is decision support. And across the industry, everyone's talking about workbenches. Everyone's talking about how do you support an underwriter at the point where they're trying to process large quantities of data to make a good decision. And I think, and this is me as opposed to anything that we're necessarily doing, but thinking about that as the point at which we engage with data, we do it now. We just don't use AI. We use I. And that's sort of limited by just the amount of data that an underwriter can take in and process and find patterns within. I think if we start to think about how machine learning type applications would help us there, we can see more patterns, we can find more things. But we all know correlation isn't causation. If this was the case, there'd just be a dogfight to the bottom to ensure the risks that were worth insuring, and then we wouldn't make any money out of those, and we'd all be in a battle for the rest of it. So I think it's not going to take us there, but it puts us in a position where we can make good decisions with data behind us. But I don't think insurance is going to become predicting the future. There's always going to be a qualitative component to this, but perhaps we can enable better decisions, or at least support that decision-making process.
I hear you. So I suppose new terms are being coined for this all the time. Centaurs being one, cyborgs maybe has got more of a purgative tone to it, but essentially enhancing human decision making, supporting the I, not the AI, or the wisdom, the human wisdom based on the ability to make qualitative judgments and to exercise discretion, supported by technologies which can simplify hugely complex data sets and make risks more quantifiable in a way that actuaries are trained to do, for example, in the underwriting space. But also, I imagine there's an opportunity for your customers to help improve that user experience at the front end. It's hard to think of a new digital contender that's won a large market share, much like in digital banking, where there are some great banks and products out there, but broadly the high street banks are still dominant. What kinds of innovations are exciting you at the moment? And are there any innovative products and revenue streams out there?
Yes, there are. There definitely are. I think the comparison is interesting, for all of us who joined an internet bank with any kind of recent experience of trying to take out an account in a traditional way. You've gone from 6 weeks to 12 minutes, and that's been driven by the technology. I don't think we've quite captured that yet within insurance. I don't think we've really identified where the key, where is the sweet spot that's going to drive customer desire for a completely transformed experience. Historically, we've seen some things which kind of bake some of this thinking in, but without AI. So the move to bedroom-rated household insurance is essentially getting away from trying to capture massive amounts of data to get to a position and saying, well, a 4-bedroom house is about this much, so let's go with that. That's accelerating the process. It's using heuristics essentially to support a decision for an underwriter to get you to an outcome better. And I think those sorts of things have moved. We've seen some things like Lemonade, for example, where essentially you're baking in things like claims acceptance into a process because you think you've processed data. But even then, I think we saw some hype cycle around some things that, whilst there's been success, possibly not to the degree to which we might have expected it to be the case. There have been some really interesting things around, because core insurance is a relatively straightforward, if data rich and complex to sort of decision-making type process. I think around the outsides of that, as risks evolve with things like global warming and, we all have issues with flood and that sort of stuff, pushing data into that process that allows you to, A, make a better decision, but B, support the customer in interesting and in additional ways is an area. So things like risk management, things like the ability to support customers with other protection-related services, which allows them to think more richly about their own risks and manage their risks as part of an overall package. I think that's an interesting area, and there are some firms working in that area now, looking at how you do that and use the technology to support that process. There have been a number of firms already who've started to lean into the pricing position to understand how you can use data and machine learning to drive some of that sort of stuff. And so people will have come across Cytora, would have come across similar sorts of similar sorts of providers that lean into that process to think about how you do that. The key in all of that for me, though, is that you still need to, I think, the underwriter at that point to be making a decision, because there's a qualitative component here. And in the markets that we're operating in, those decisions need to be made because essentially we're accepting some risk. Now, maybe that's me from the dark ages, and some of this will get simplified and automated as time goes on. But I think where we are now, if we look at where we just turn it into a data-driven process, like the comparison sites, what we end up with is very, very thin margins. Very thin margins, very difficult to make money. You require massive amounts of volume, and actually, does that really drive a lot of choice and diversity of offering to the customer? Not sure it does.
Yeah, absolutely. And while lower prices will appeal to the cost-cutting side of us, delighting customers is a big part of that experience. And to offer a tangible example, you mentioned flood risk. You mentioned finding new ways to support your customers in managing those risks. We all know there have been record floods year in, year out. Yorke seems to be particularly vulnerable, and you insure all of the cathedrals in the country. So York Minster must be included. You have perfectly aligned incentives with the custodians of that incredible building, because the last thing you want is for it to be flooded and there to be an enormous claim against the policy for that. Maybe that's an obvious example, but are there ways in which you're able to say, we've identified a new flavor of risk, we're helping you to get ahead of this risk. Have you considered, for example, improving your flood defences in the local area?
Yeah. And that's exactly the sort of thing that we try to lean into. We think risk management's a key part of our offering, but sending a lady with a clipboard doesn't, I mean, it's an interesting conversation and there's wisdom and experience there, but actually empowering that person with access to a series of data sources based on the data that they're collecting, that then provides them with a richer set of things that might support that customer interaction, and better for the customer, better for us, probably cheaper insurance because we're managing the risk better. We're all managing the risk better. I think it's win across the board. But again, using that sort of digital capability and the additional data that you can use to enrich the decision making makes that just a much easier process.
Amazing. And continuing that line, because you've mentioned your background in philosophy and your interest in this human machine interface and the different parts of the insurance business that it can support. My father is a chess master. As he's explained to me, he'll never be a grandmaster because he doesn't have the neuroplasticity to rebuild his brain in the way that a 9-year-old might, to think 27 moves ahead. He's also a retired engineer who understands genetic algorithms, and he built a decision support system for himself, which is not technically cheating, although chess.com did kick him out for being a robot, but it helps identify threats. It was saying, by the way, if you move this, then there will be this risk to you. So technically, that makes him a centaur. So AI will beat the best chess players, except where the best players, those grandmasters, are able to augment their game with AI assistance. Now, you mentioned that insurance is an old game. Companies have been using their data to improve their decision-making on risks and claims since the 17th century. Can you tell us a bit more about how you're seeing this partnership between humans and machines evolving? Maybe how the strengths of one could complement the weakness of another?
Chess is a great example because essentially it's a set of patterns, and what's happening at each of those move steps is someone's looking to identify patterns that have led to the position that you're in, and then work out, based on all of the possible options from that point, what's the best path to follow. And what you've got is a constrained set of options, and therefore, whilst there's an almost infinite number of potential capabilities, it is a constrained universe, and there are paths that you can clearly identify as being better than others. So I think that's a really great example within the world that we operate in, because we're looking at decisions about risk, and risk in itself, whilst you can assess probability and you can use data, is never going to give you an absolute answer. And so what you've got to do is to identify an optimum outcome based on the information you've got available, and that the perception of that is something which, I'm going to be mildly controversial here, is going to require more than simple compute. It's what we call knowledge, I guess. Well, so there's kind of an epistemological issue here from an AI perspective. When it tells you something, how do you know? How do you know it's true? What does that knowledge consist of? And I think it's interesting, as we go forwards, you no longer have to know what the capital of France is, because you can get that information. That's all of that information is available. Data is available. It's what you do with it. And I think there's two parts to that. It's one, the ability to think critically about data that is presented to you in a way that allows you to then use it to make an appropriate decision. And also the ability to search for that data in ways that presents it back to you such that you can use it and therefore be able to engage with it properly. The way in which we ask questions represents as much of our kind of inbuilt heuristics and biases and ways of thinking that, as anything else. So the kinds of questions that we ask the machine will shape, and the way we ask those questions will shape the answers that we get back. I'm a massive fan. If anyone hasn't read Daniel Kahneman, Thinking Fast, Thinking Slow, we really should, about system A, system B thinking. And we tend to answer the difficult question by replacing it with an easy one, because that's just a much simpler thing to do and much faster. We do that in this kind of an environment. I think we potentially open ourselves up to risks of just not really understanding the answer that we've got, and therefore making a poor decision. And we're not necessarily taught that. I think, historically, we as an industry, we've had to follow rules. We've had to follow, we've built AI into our systems over years by putting in place what the underwriters always used to refer to as tripwires. Here's the underwriting process, but you can't go beyond that. And that's just the rule. And that's because experience has told us that. So we've built those kinds of rules into our processes. They're manual, which is understanding how all of that links with the data that we could use to drive these decisions. That's
intriguing. That might be a good point to pivot into rules, traditions, and processes within organizations. In my experience of very large businesses, they can take time to embrace change because of the complex decision-making processes in those organizations. And when I've worked with innovators before, they've had a number of metaphors or analogies to explain the kind of particular tensions and frustrations with balancing out change and the status quo. I'll share two of them now. The first was a entrepreneur who helped banks to better measure their productivity. And he observed that big procurement cycles, for example, went through many stages. There were multiple decision makers who would often have different or completely competing interests in a particular piece of change, either happening or not happening. And he shared an excerpt from the CIA Field Operations Manual from the 70s, which describes how a saboteur can break an organization. And it lists a series of steps that we would all recognize from perhaps dysfunctional organizations that we've been around in the past. Everything has to be referred to a committee. Decisions are always opened up and re-challenged. Caution is urged at every stage. How do you, as an innovation leader, encourage organizations that you work for to embrace change?
Right. It's a great question. Interestingly, that the difference with where we are now, I mean, I've said, I'm on record of saying, change should be avoided unless it's absolutely necessary. And what you have is cycles of change. Back in the dim and distant past, Peter Senge wrote a book called The Fifth Discipline, if anybody remembers it, and he talks about S-curves associated with paradigms or operating models. And so something starts, it starts to be successful, and the curve is very sharp to start with, and you start to make some substantial progress, and then you get to a point when it plateaus and it flattens off, and then change stabilizes. Essentially, you've reached the limits of that particular paradigm for delivering additional value, and then over time, once it's flattened off, it'll start to decay. And he talked about this discipline of the second S, is when do you start the innovation cycle, which is going to be a bit messy. It'll be flat at the bottom before it starts to pick up. And his argument was essentially you need multiple second S's running, not once you've peaked, because these things take time. You need those second S's running whilst you're on the curve upwards and generating value from your existing paradigm to say, right, where's the next thing got to come from, so that we're ready to hit that upwards curve once that starts to plateau, and we can continually drive opportunity and value out of the model. So now that's what requires a very different mindset, because you need a mindset associated with managing what you've got, and that's the kind of stable managerial, manage efficiency, get as much as you can out of that model, in parallel with well, hang on a second, let's assume that all of that's broken. Let's assume that there's a different set of values. We bake the values of our operating model into the way we run the organization. And so how we evaluate people's performance, how we do all that sort of stuff related to the way we work now. To innovate, you've got to have values associated with doing things in a completely different way to the way that we do it now and breaking it. You need those two mindsets running in parallel, and you have to create that environment. Part of the challenge we've got now is that those cycles become shorter and shorter and shorter because what technology is doing is accelerating the ability to move from one model to the next. And we've all seen it in our lifetime. I mean, I don't think I'm that old, but the only thing on my desk when I started was a large green Bakelite telephone, an in tray, some carbon paper, and an ashtray, and that was it. So the change that we have seen, people listening to this will have seen is massive, but you tend to just think of it as this slice. So we're in that accelerating process. So for me now, it's about creating hypotheses. So where are we now? But what else could be true? We need to be running those multiple hypotheses and keeping and experimenting around them to say, where might this take us? What could this offer? And in agile language, although I'm using a small a, being prepared to fail, being prepared to think about the future, experiment, fail, learn from the failure, gather the data, think again and move on. And that means very short time horizons for those experiments. So I think the old days of betting the farm on a massive, core system replacement with something that's going to completely transform every process. And I think that's probably changing because timelines are shrinking. We need to be able to move faster, respond more quickly, and think both in the new world as well as in the existing world, getting those sort of multiple kind of second S type paradigms running.
Two partner questions here. One from a managerial perspective, I suppose one's thinking about managing up and the other one managing downwards. When you're pitching for budget, and you can speak to your current experience or companies you've worked at in the past, how do you make the business case for innovation? How are you convincing people that maybe aren't yet won over that this is something that should be funded? As you say, maybe it's not betting the farm, maybe it's a series of smaller bets.
I think it needs to make money. We've all experienced business cases that we've looked at that are going to completely transform the blah, blah, blah. And it doesn't turn up in the P&L. And so I think we've got to have a clear view on what's this actually going to mean for the performance of the business. And it could be great, could be incredibly cool, very exciting. But if it's not going to transform itself into something, then essentially we're spending money that isn't going to give us a return. So I think we've got to know what that looks like. Now, that doesn't mean that we necessarily need an immediate return on every single initiative that we do, but we need to be clear as we experiment. How do we know that this is going to lead to value? Example I always use is claims leakage. Right? So, in the many, many years I've been doing this, I've done a number of claims leakage projects. We all have. And we've seen benefits reported from claims leakage. But I'm not sure how often you would say, so the total cost of claims for the business has gone down over that period. It's usually gone up. But the argument is, well, gosh, think what it would have gone up if we hadn't done the work that we've done. Now, that maybe that's true, but it's really difficult to nail down. So finding that, how do you measure where you are now? What's your baseline position? And what will this mean for those numbers? How will those numbers move as a result? And then what might be an indicator of success here? Might not be the end result, but what would be an indicator that we're moving in that direction? And actually, I think AI is an opportunity here as well when we think about change. So start to model out the implications of changes that you make within a business and what that means to some of the sort of operating ratios. I think there's some interesting ideas in there about sort of scenario planning, and that doesn't mean culture is not important. Just for us, culture is incredibly important. We spend a lot of time, but we think that leads to better performance because we work better together, we serve our customers better, and it therefore delivers a better result.
Thinking about your team then and the careers that you're nurturing, we've heard a lot recently about a new breed of technologist, the prompt engineer, and you touched on that earlier with your point about the kind of questions that we ask, revealing a lot about ourselves. What trends have you seen in the capabilities and skills of the workforce, and what are you looking for when you hire?
I think this is fundamental to the whole sort of AI future. AI requires, I think, if I haven't said it, I'll say it now, it requires you to engage with it in a different way. I mean, MI reports, we had to engage with those and think about them, but I think it's a different thing because it's more data, potentially more impactful implications for the business, and therefore you need to think differently. So I think the kind of critical thinking that sits behind the way in which we analyze data and think about data is absolutely essential. I'm going to have a slight shameless plug for a charity called Sapere P4C, which is an educational charity that teaches teachers how to educate philosophically. So to use questions and answers and interact on key topics across the curriculum. And the results that we see in terms of, especially children from disadvantaged backgrounds, the results that they get, opposed from sort of the sage on the stage, you've now got a guide on the side that's teaching you how to engage with the material. They get great results. And I think that's true for us in businesses as well. We need people that think critically, have got those skills, have got those capabilities, and that will allow us to do more. All of that's an educational thing. I think still well-educated people with experience and the ability, but it's that critical thinking component that becomes really core to it, so that we can ask those right questions and then respond in an appropriate way.
I love that. Not the sage on the stage, the guide on the side, and asking the right questions. Wonderful. It's very much the mentality of mindfulness and coaching, which I've been learning a lot about at the moment, helping somebody to find their own way to their truth with guided questioning rather than dictating or imposing. So on side there.
And that's going to change a managerial paradigm as well, I think. How do we manage our people? Because increasingly the people that are closest to the process, and we know this anyway, know more about it than the people doing the managing. And I think engaging all the way up and down the organization to work out how this data and how this insight, how these patterns are going to transform the way we work is really important.
In terms of AI and in terms of what we use, I mean, it's the gut feel. So basically you're supporting that gut feel by analytics, and you're supporting it by the data itself to making those decisions. And I think the human in the loop with anything in terms of you're getting information from the AI source, making sure that you understand that and making sure we can learn from that, etc. I think that's where we're going to be looking to in the future. You mentioned previously about the staff in terms of how we change and how we've evolved. I think one of the things that I've seen, I've got two young girls, they're 17 and 15, and they're constantly on their phone. I mean, they won't even take a phone call. I'm happy to phone somebody up and speak to somebody. I've got a problem. I want to speak to somebody about it, but they get a phone call of somebody they don't know, and they won't answer the phone. They'll say, "Oh, I don't know them. I'm too scared to answer the phone." They'd rather communicate over WhatsApp or communicate over Snapchat, and they've got that way of communicating. Do you see that as a challenge for insurers going forward, that they need to embrace that communication methods and embrace the younger generation in terms of communication?
I think that's a really good question. I mean, if you still look at things like policy documents. I mean, I've got relatively young adult children who are out there buying insurance for the first time, and for them, this just still looks like an unbelievably archaic process. Even if they get a link to a vault to sign in, here is a 20-page document that's summarizing your cover and doing all that sort of stuff. I think it's still, we haven't really worked out how do we connect the product that we've got to the needs and the requirements of the generation that are going to be buying it in the future, who are just not used to doing this in the way that we do. I think we're still constrained by the way in which we do this now, and we need to think about how we manage that. And this sort of technology hopefully will allow us to get there. We've certainly been exploring how you summarize all of that to get it down as simply as we possibly can. If we're talking to a small charity, then they don't have a lot of expertise, and you don't necessarily want your customer to have to be an expert in something to enable them to buy it, or to sign some conditions which they don't really understand.
That's a wonderful point. I remember being delighted by Virgin Media when they offered me a plain English summary of the terms and conditions and said, and this is legally binding, this bit, by the way, you're welcome to read the rest, but this is the core of it. So it sounds like you're moving in the same direction, which will surely improve accessibility and disrupt, I guess, crystallize discrimination. Because if somebody is not willing or able to read to a degree level, like a paralegal, a 17-page document, they're at a disadvantage. There's information asymmetry there, and it won't protect everyone equally.
No, and the consumer duty regulations have made us all take a big step forward there, and that's great, and that's really great regulation. Sharpens our focus on what we're doing, but Should we need it? I don't think we should need that kind of regulation to really home in on what really works for our customers. I mean, part of the issue, and this is a question for you, Simon, we're an insurance company, right? So we know what we do and we know what we've done and we know the technology we've got, but with all of this stuff that's emerging really fast, keeping up to date and keeping engaged with everything that's happening is a massive challenge for organizations, I think. And therefore, the nature of the partnership with technology providers, I think, is going to have to change as we step forwards. The way in which we engage with experts who can help us and support us on the journey needs to change. Obviously, you're from the other side of the fence to me, but how that's going to change and develop, I think, is an interesting challenge for us.
Yeah, and I think the days of changing a full system, are, I won't say long gone, but I mean they are far and few between. I think the add-ons, having the ability to partner, having the ability to integrate with external parties, having that ability to have your core system, but having that flexibility to bolt on different things that do different jobs for you. I think that's going to be key in the future, having that ability to be able to have small wins able to interact with your own core solution is going to be key, I think.
Yeah, no, I agree. And architecture is a critical part of that, isn't it? Because we need to be ensuring that we are architected to enable us to take advantage of things as they emerge, rather than just banging in a point solution here or banging in a point solution there, which then becomes incredibly difficult to integrate and just adds to the muddle.
Yeah.
Understanding and having a kind of a view. Now that kind of takes away from me saying, well, what you do in short, sharp experiments that move you forward.
That's right.
You've got to do it in that context of understanding in what direction are you trying to take things.
It's the size of the prize, isn't it? And you've got to understand, if I do what is my return on that? What is the benefits of doing that? It might not, as you say, it might not be financial, it might be more strategic, but yeah, it's having your eye on the size of the prize really, and making sure that you align everything to the needs of the business. I mean, us for an organization, when we engage, we try to understand the problems, understand what are the key aspects, and try to, when we talk about AI, we try to encompass your existing analytical teams. So, we don't want to take away from what they do, and we want to embrace what they do and work collaboratively. Insurers are quite protective of their IP and what they do, and they think they might have a benefit of that. So we don't want to be taken away and saying, we'll provide you with this solution, give me 6 months and we'll come back to you. We want to try to embrace your existing businesses and making sure that we are in line and having short stages of engagement where we're doing a benefit of return each stage, and making sure we're closer to the business and making sure we align to those business needs, I think gets the benefit of doing that.
Exactly. I agree. And keeping those hypotheses moving forwards, testing them out, deploying and moving forwards. There's a danger. We all ask the machine the same question. We all get the same answer. And then what?
Yeah.
I mean, where do we go? Because so it's understanding how we curate the data sets we're going to use to drive a lot of these machine learning type applications. How do we manage all of that? These are all new things that we don't do now. It's a development of stuff that we've been doing for some time, but it's new capabilities, new skills, and we need to understand how we develop them, and we need to work with partners, I think, to help us get that big picture.
You talk about machine learning. I read an article to say that an autonomous vehicle produces 19 terabytes of data in 1 hour, and only 10 to 15% of that is actually quality data. So you're having to use machine learning, using the AI to actually work out how can we extract the 10 to 15%. So, I mean, you talk about, how we're going to use data in the future. We've got masses of data, and we're producing masses of data through AI and through machine learning. And it's making sure that we get the benefits out of that data in a quality way that supports the business and supports what we do in the future.
Because it's not cheap.
No.
We all move on to the cloud and we think it's a great thing. And then you look at the compute costs, and the more of the data you push through that, this is potentially very expensive. So we need to be able to be clear we're generating value.
Expensive and resource intensive as well. To continue the conversation about partnering, and thank you for raising it. You mentioned that you're finding new ways to think, that you're looking for new products and new ways of working. That's continually part of the innovation role. Earlier on, you mentioned those S curves and keeping on looking out to the horizon as those bets start to pay off and become profitable and make money for the business. I'm sure there'll be many people listening who would love to talk to you about a new innovation, new product they've created as a startup vendor, or perhaps they're working in a team of technologists who are solving these kind of problems for other organizations and wants to meet you. We've talked a bit about not answering calls. So perhaps you get cold calls, pitches on LinkedIn. How do you like to engage with your suppliers? What does good look like and what does bad look like for you?
Oh, that's a good question.
Mm.
It's a good question. I think it was interesting actually because I was reviewing a couple of weeks ago the really excellent Oxbow report on InsurTech in the UK, which they produced, I think, about a year or so ago, which is a really, really helpful, really great document, summarize different types of applications in different places. And Greg and the team there do a brilliant job, and it's a really great publication. But it is interesting, even within there, you look at these are the ones to watch for. There's 2 or 3 that are no longer functioning, and that's because they haven't got to a next round of funding. And some of that is because, we're in a commercial world and therefore we're going to have to generate returns. So how do you sift through all this stuff to work out what should I be doing? And how does that fit within the context of everything else that I could be doing? Because you feel like anytime I make a choice, like a chess move, I make that choice, that's going to shut off a whole load of other possibilities that I now can't do because I've just done that. So when I'm looking at some of these things and thinking about what I pick and which way I go, I've got to try and bear all of that in mind. So it leads back to the architecture bit, I think, because understanding what's the large scale context into which I want to deploy some of these things will rule a bunch of stuff out. But for me, actually, I went through a phase of thinking, well, conferences are dead because, it's just the same old people talking about the same old things. And what do we really get to now thinking, actually, this is a really great opportunity for engaging with people who are exploring in different ways. Lots of vendors all in the same place, talking about the things that they're doing. And I'm finding that's really good. I love the Tintech stuff. I think all that sort of stuff works brilliantly. They do a great job and you get to see and meet people. And I think this is a potential opportunity. Actually, I encourage some of my guys to get along whenever they can, because it's part of that thinking process that we need to be doing to generate ideas. But it is hard. It's a difficult calculation.
I suppose with the conferences, you have to weigh up the cost of the conference and the cost of being there, your stand costs and everything else. And what is the return that's going to generate for you? And as you say, I think some insurance companies will feel that being there and being visible is more beneficial than not being there. Talk about different ways in which organizations change. I was looking at something where we can take unstructured data and make it into structured data. I think that is going to be big in terms of how we can use AI in the future and machine learning and making sure that we're taking stuff that would take a person, take an invoice, for example, that was on a piece of paper. It's not in a format that they've used before, so they'd have to type it in. But having machine learning that can look at that OCR and make predictions, pulling out key bits of information from those images, that's a tangible benefit that you can see. And I think one of the things that we look at in terms of AI, where is it going to be going in the next 5-10 years? I mean, you look at the call centers in India. I mean, are they going to be starting to disappear in terms of the use of AI going forward?
Looking far ahead in 5 to 10 years' time, where do you see innovation making the biggest impact? What's going to be the biggest change in your world?
From our perspective, again, this is just my view, but I think a lot of the interaction between customers and insurers has historically been about collecting data. Probably, 30-40% of the cost of the business are associated with collecting data. And when I started, that was filling in forms. Obviously the internet changes a lot of that. You push a lot of that activity back out onto customers. Don't know if that's a good thing for customers or not. If anyone's tried to get multiple quotes, it's a pain in the backside. And even using the comparison sites, you often have to end up doing it again. So lots of that has been done. I think what this technology presents us with is the opportunity to transform that, to get away from, if we were to put your postcode into the machine and it tells us pretty much everything we know. I mean, we know where it is now. We can do that against flood risk. We can do it against subsidence risk. We can do it against all kinds of things. I think over time, that kind of publicly available public domain data, which is not competitive, it's not anything like that. All of that becomes something which you can just make available. All of that kind of dull, tedious, boring interaction is going to change as much on claims as on anything else. And I know that some of the Internet of Things stuff hasn't really caught on in the way that it might do, but certainly in the commercial world, there's opportunities there. Again, that means a lot of the data collection grind goes. The interaction with the customer becomes something where We need real decisions about the real extent to which we're going to, offer protection for risks or support with other services or pay claims when they need to be paid. The way in which we interact with customers is going to be all about the good stuff. And I think if we allow the technology to take us down that path, then it's good for customers, it's good for us. It gets us to a point where the quality of our data is better, our decisions are better, and it allows us to compete on the stuff that we want to differentiate ourselves against, which is our ability to look at that risk and make a decision based on a number of risk factors, more factors now because of AI, and still make the right decision for the customer, but also for us, and create a real value generating proposition. I think that's where it's going to go.
Wonderful. I have heard of a few examples from other insurers, nothing to do with you or your insurer, where there comes a point around a claim where something has gone very wrong. And you've gone from the status quo of basically forgetting about your annual premium. It's become something that you have to bear once a year to, oh no, this money changes my life. This enables me to rebuild my home, recover from the death of a loved one, replace a broken car. And those moments are often happening in crisis. Emotions are involved. So based on what you've said, it becomes all about the good stuff, giving the opportunity to not compete on lowering those premiums by a couple of pennies, but actually making customers happy. And it seems like there's a great opportunity to help in moments of crisis, whether that is enabling a loss adjuster to very quickly validate, no, this is not fraudulent. Yes, you are authorized to pay out this substantial sum of money, which is well warranted, and therefore provide that value to help somebody. And it strikes me from the way that you've presented yourself today and the way the organization presents itself online, helping and dealing in good faith is a big part of what you're doing.
Your good faith point, I think, is absolutely central here, right? So, I mean, there are bad faith situations in claims environments and stuff like that. Human nature, it'd be nice to think that that would get better in the future, but I suspect it won't. And to do that, those bad faith actors essentially make life worse for everybody because, increases premiums, it makes everything worse. So data to enable us to drive into that in a way that identifies bad faith actors and does it properly, but doesn't do it at the cost of those who are good faith actors. Not everybody who fits in with a pattern is a fraudster, So I remember having a very unusual claim where some jewelry that we'd hidden in the freezer whilst going on holiday, we'd had power cut. My mother-in-law had turned up to put some food in our fridge before we came back from holiday, saw that the entire contents of the freezer were stinking, and threw every bit of jewelry I'd bought for my wife out in a black plastic bin bag along with the rest of the food. Now, I was explaining that to the claims handler, and I could almost see them in my mind's eye saying, come on, everyone, have a listen to this. You'll never guess. So not everyone is right. So you've got to be able to get to that point quickly, understand it, make good decisions based on what you can see. But I think data will get us to a position where the good faith stuff allows us to ensure that the policy protection that you've bought and that you understand that you've bought covers your needs. Because we've understand all we can about you and the risks that you're presenting, and you've understood what you're preparing. And therefore, when we get to the point of claim, the good faith actors, we can respond to that quickly. And we're going to get away from some of those bad moments. Because it is, it's the worst point in your life when you've got to make an insurance claim. At that particular moment, it's a bad thing, and then nobody wants to have to do it. So how do we make that process work for those good faith actors, which is pretty much everybody, So data allows us to, I think, to do that and do it better. The way in which insurance companies, especially those that draw from a geographical area, interact with the community that they're in, especially as they start to think about what are the employees of the future look like, I think becomes increasingly important. We make a big deal of our values and therefore we want to attract a certain sort of person, but I think trying to create a different understanding of what insurance is about to allow us to get access to the people who can actually use this technology to do our industry and bring our industry a better place is difficult. I think people always joke, no one ever grew up wanting to be in insurance.
No.
Well, we're going to have access to the people that think the best thoughts, that use this data in really interesting ways. I think it makes it an exciting prospect. I think, insurance is cool and sexy in an AI world, but we've got a lot of work to do to change that perception about what insurance is and what it means if we're going to get access to the talent that we need to exploit this technology for the future and to transform ourselves.